Welcome back, investors, to Ticker Time News. I'm Adam, and SoFi stock has an 80% upside, a 40% compound annual growth rate, a bank charter that lowers SoFi's cost, and an elephant that's not as bad as investors think it is. This and a little more is what we're talking about as I share my thoughts and convictions on SoFi. One of SoFi's goals is to help people reach financial independence. This happens to be one of my goals as well, and why this channel exists. You could help me out by smashing that like button, sharing this video with everyone, and clicking subscribe to join our family of investors. Let's start with the elephant in the room, the $1.1 billion of private convertible notes due in 2026. You know, that news that sent the stock on a spiral down? Yes, the offering is technically dilutive, but not right now. The ability to expand the value of the company's capital by 8.5% today in exchange for 5.6% dilution later is a net positive. Additionally, the company gets to put that money to work and generate a return for 5 years. Well done, SoFi. Now, this deal has a slightly unusual feature. The price was set at 40% more than SoFi's stock's current price of about $16.21 a share. That could imply that SoFi and the bankers and investors involved in the notes feel strongly that SoFi shares could move higher. Otherwise, why issue the convertible notes to institutional investors with a conversion price of $22.41 per share? Something else about this. Why did SoFi need the cash? In last quarter's earnings, SoFi's free cash flow was $55.8 million. So, could SoFi be considering an acquisition like they did with Galileo last year? I think this is a good question to ask. It could also be for its bank charter that I'll talk about in just a moment. As you can see, I don't think the market quite understood what was actually happening with SoFi's notes, as SoFi's stock sold off over 14% before finding support around $15.50 a share. The stock had been on a nice rally before the news and has been able to recover that trend since. So, what can we take away from all of this? I see the recent volatility in the stock as good news and something long-term investors should welcome. This gives us opportunities to grow our positions. I'd much rather buy SoFi at $16 a share than $20 a share, wouldn't you? SoFi is in the middle of a powerful transition to becoming a full-fledged mobile-first super app on a path to becoming an official bank with in-house next-gen lending capabilities from Galileo. SoFi is also on a path to a 40% compound annual growth rate at least through 2025, driven by its financial services and its Galileo platform. SoFi is undervalued and a strong buy, supported by solid fundamentals and a growth story that has become popular with retail investors just like me. It's currently down over 42% from its all-time highs, creating an attractive investment opportunity. Or should I say, an attractive buy the dip opportunity. Now, my view on stocks is that they go up if they beat investor quarterly expectations and future guidance. Otherwise, stocks go down. So, an ambitious forecast for growth from a company like SoFi is a double-edged sword. If an analyst raises their forecast, the stock can raise an anticipation of the company meeting it. However, if the company misses, the stock's fall will be significant. It's not a perfect game because analysts can get it wrong sometimes, but it's the game we all have to play. Now, I actually cannot believe what I'm about to say, but it seems like Wall Street likes SoFi too. The street is very bullish on SoFi's stock, with a strong buy recommendation based on 5 reports in the last couple of months. SoFi has an average price target of $24.50 a share, a 51% upside from its current levels. Even Jim Cramer likes SoFi. He said last week on Mad Money that he's got tremendous faith in the company's CEO and recommended viewers buy the stock. SoFi has a unique position in the market and can adapt its business model to continue its already strong execution in cross-selling among its current customer base. Plus, SoFi's many verticals will lead to continued success in reaching new customers. Let's talk about valuation for just a moment. If we value SoFi at 9 times 2023 sales, that would put SoFi in the price target range of $28 a share. The ongoing trend of improving fundamentals will only drive that multiple higher and closer towards a bigger competitor like Square, whose multiple is currently at 14 times sales. SoFi becoming profitable in the next 3 years as losses gradually drop is entirely possible. Now, when it comes to SoFi and its bank charter, it's not talked about enough how valuable this bank charter is for SoFi. For some context, in February 2020, Lending Club, ticker symbol LC, announced the acquisition of Radius Bancorp. The transaction closed in February 21, giving the company a bank charter. Lending Club projects that access to deposits will lead to a 90% decline in funding cost, equal to $60 million in savings in year one. Like SoFi, Lending Club noted that the bank charter, among other opportunities, enabled a more predictable, stable income stream. In March 21, Square, ticker symbol SQ, began operating a Utah charter industrial bank, a year after receiving conditional approval from the FDIC. SoFi began exploring the possibility of an industrial bank several years ago, and the OCC granted conditional approval for a national bank charter in October 2020. But the move into formal banking was accelerated with the March 21 announcement of SoFi's acquisition of Golden Pacific Bancorp. This was a bullish sign for SoFi, as they now had possession of a bank charter themselves. In a recent investor presentation, SoFi estimated that a bank charter would contribute roughly $200 million in earnings in its first full year of operation, rising to $300 million by the fourth year. SoFi indicates benefits of a bank charter as increased net interest margin from holding loans longer and enables increased growth in lending. I hope everyone can see how valuable it is for SoFi to have this bank charter. If you would like to start a position or grow your position, watch SoFi as it moves up this trend line. I will post a copy of this chart on our Twitter account at TickerTime News. There is also a link in the description. Will SoFi meet resistance as it approaches this trend line moving down, or will there be enough momentum to push the stock through? Right now, we have momentum or volume moving down, but we also have the relative strength index moving up. So this divergence of the two will be critical to watch as SoFi continues to move towards the resistance line. Borrowing over $1 billion is a lot of money for a company of SoFi's size, and is usually done in times of distress with terms not in the borrower's favor. But this is not the case for SoFi. The company is financially strong, and the loan has highly favorable terms. This capital provides the company with fuel for further growth at a time when it is rapidly increasing headcount and building out an ambitious line of products. Well, that's what I think about SoFi right now. What do you think of SoFi's billion-dollar loan, its share price, bank charter, and valuation? Let me know in the comments below. I'll join you there in just a moment. Thank you so very much for watching, and I will see you in the next video.